traders, Greg here with a market update. So look, lots going on in the market and lots of meaningful moves. So let's start off with some old news. Aussie CPI yesterday. So that actually came out yesterday just a touch below expectations. So the hot print that the market was worried about wasn't realised. So why was that meaningful? It was meaningful because it means that the RBA meeting next week is not live. So rate hikes now are certainly being taken off the table. The ASX absolutely loved it, and we made new record highs yesterday. But the Aussie did get punished and went below 65 cents. At the moment, the Aussie is back trading above 65. It's actually trading above pre-CPI levels, around 65, 45. And I think, on the back of what's happened with risk, obviously, we've had a big rip in risk higher, and then also, commodities higher. So, look, I think maybe, the Aussie selling now, even with the rate hikes taken off the table, maybe overdone, and as long as risk stays elevated, cautiously bullish. Okay, some more old news. Obviously, yesterday's BOJ meeting was very meaningful. In that they were actually quite hawkish. Look, they did raise rates by 15 basis points. They do have a bond tapering program now in action, and also in the press conference, Wader basically said that a quarter of 0.25% is still a low policy rate, and that even 0.5% is not a ceiling. So they're open to more rate rises in the future. So look, dollar yen now certainly is a sell on rallies. It is not a buy on dips anymore, and we're currently seeing dollar yen sub 150. So obviously a meaningful change there for trading dollar yen. Moving along, yesterday's FOMC overnight. So we saw finally a Fed pivot. So Powell is open to a September rate cut, and is also open to potentially another 2 more before the end of the year. So he did preface say that obviously data still needs to continue to be positive, but at the end of the day, look, it's the bar now is set very high for the rate cuts in the US not to happen. Markets absolutely loved it, right? So US bond yields got smoked. US 2-year yields are down near 4.2%. 10-year yields are down towards 4%, and we saw equities have a massive rally on the back of that. So look, at the moment, markets are certainly in a sweet spot in that economic data hasn't rolled off to the stage where it looks as if recession is imminent, and at the same time, markets got rate cuts to look forward to. So I would imagine that now seeing any sort of meaningful sell-off or a big sell-off in markets probably is in the rear view mirror. That markets will probably continue to grind higher risk-wise. Yes, before we wrap it up, there's probably one last thing to talk about, is that geopolitical risks are still with us. Post the leader of Hamas being assassinated in Iran, the Iranians have come back saying that Israel deserves to, a strike back on Israel is warranted. Gold, we've been talking about this all week, that you can't be short gold, for obvious reasons with this geopolitical risk, but also with obviously the Fed coming to the table with the rate cuts. We've got gold back up towards almost 24.50 at the moment. So huge rally in gold this week. Obviously, next level the market's going to be looking at is up towards 24.80, where we saw the record highs recently. Anyway, good luck with your trading, and we will check back in with you soon.